Ladies and gentlemen, welcome to Daily Bread. We are back. We've got a lot to talk about today. It's been a bit of a rough time in markets lately. I feel like I've been saying that every episode, but it's just been the fact that it has been. You know, it's been a few months of not very fun times, very boring sideways markets, and then all of a sudden this week we had a brief, one-day stint where we broke the sidewaysness down because of our good friend Gary Gensler. And but now we're right back up to where before he decided to sue all of our exchanges. So we'll get into that. We'll get into some Gary Gensler and Binance and Coinbase stuff. And I want to give you a little, I got a little big picture, connect the dots for you. Not so much, you know what happened. He's suing Coinbase and Binance for basically issuing or selling illegal securities. That, that's basic. But we're going to get a little bit in the weeds of bigger picture of what's going on behind the scenes on that. And then I also want to talk about just the market itself a little bit, how I'm playing it, things I'm looking at, some coins here and there, and all that. But anyways, let's get into it. But before we do, I wanted to give a quick shout out to my buddy Zoomer Oracle. He's building a new little platform for meme coin trading called Pepe Analytics, and I told him I'd give him a little shout out on the show. It's a tool for trading meme coins. I wrote a little thread on it on Twitter, so you can check that out. But it's gonna be like the one-stop shop for meme coin trading, and they just launched their passes basically to use the platform, which will be live next month. And so far, everything I've seen from it looks pretty legit and looks pretty good, and looks like it's going to be a very useful tool for trading meme coins. It's an NFT pass. There's only 520, I believe, of them, and there were 400 sold to the public, so even smaller circulating supply. And then next month, when the platform goes live, you'll be able to redeem those NFTs for the Pepe AI token. Great ticker, by the way. Phenomenal ticker, Pepe AI. So anyways, quick shout out to that. You can buy those passes. The current market cap they're like 0.6 ETH, I think, right now. They minted at 0.35. I think they're like 0.6 ETH-ish around there last time I checked, like earlier today. But the market cap is only like 600K, I think, roughly. So I think when the token goes live, it'll be much higher than that. So probably still a decent buy. Not financial advice, of course, but just wanted to give a friend a shout out for his platform. He's been working on this behind the scenes for a little bit, and it's pretty legit. So go check it out. Let's get into the show. So, actually, I'll leave the link to that in the description, obviously. Okay, let's get into the show. Let's talk about the market for a second. We are in the trough of despair. Okay, we are solidly in the trough of despair. I'm looking at my reflection right now on the camera. My forehead is extremely shiny, and I'm not sweating or anything. It's just like these lights are like in my face. Maybe hold on. I need a haircut, so that's why I'm wearing the hat today. So okay, I'm wearing the Seinfeld hat. Okay, well, hold on. There we go. Okay, that helps with the shininess. We're gonna flip the hat around. All right, repping Seinfeld. Okay. Back into the market. We market sucks. I don't know what else to say. Market's been just sideways and choppy. So yeah, if you're like a scalper, it's been great. But other than that, it's been pretty shit. So I don't know what else to say other than that. But I wanted to talk, like, zoom out, bigger picture. We had terrible news this week with Coinbase and Binance. And we didn't lose that like 25K level. We looked like we were going to lose it for a moment there on the Binance news when we dumped really, really, really hard. But we didn't. And then on the Coinbase news, the next day, we actually pumped on the news. The market gave a big middle finger to Gary. So overall, the market seems pretty resilient. It's funny. The benefit of this market has been for certain things. Like I talked about farming LSDFi stuff with ETH in previous episodes. That's been great because I've just been sitting in a bunch of ETH in these farms, and ETH has just been. I think my average entry to get into these farms was like 18, 20 to 40 on ETH, and we've just been there up or down a little bit, but been around there for 2 months now. So that's been nice. So there are benefits, right? Anything where you're trying to just farm shit, like especially around ETH, has been very nice. But yeah, I mean, the market's been tough. And really, I mean, I talked so much about this over the last few episodes. I don't have a whole lot extra to say, but it's been still just max PvP. There's one or two hot coins of the week, it seems like. There will be some hot meme coin of the week. This week it was Harry Potter, Obama, Sonic, Inu, or whatever it's called. Cool. I can't take, every time I have to talk about meme coins on this show, I just think of like that meme from Succession where Logan is like, I love you guys, but you are not serious people. And when I have to come on here and say, oh yeah, the best play of the week was Harry Potter, Obama, Sonic, Inu, it's not the most fun thing to talk about. But anyways, that was the meme coin of the week. And there were a few DeFi plays. There was Equilibria and Artichoke. Can I be honest? I totally faded Artichoke. I was gonna be in pre-sale of that. The name was so dumb. I thought it was a scam. I swear to God, I didn't buy Artichoke because I thought Artichoke Finance. This is the dumbest name I've ever heard, and I just totally wrote it off. And that was a mistake because I think it's up like 5x or something. I don't even know, like 5x from pre-sale or something, maybe even higher. I don't know. So that was a mistake. One thing I've learned that I'm bad at, that I still made this mistake, but crypto people are terrible at branding and marketing. So don't necessarily write some project off because you're like, that sounds so ridiculously terrible. That has to be like a scam. They're just trying to rug my money if I put my money in that pre-sale. I guess don't do that because, then you miss out on a 5x plus like Artichoke Finance. Artichoke Finance. That's the best name you could come up with. That's like you said, I'm going to put my blood, sweat, and tears in Artichoke Finance. Anyways, so I missed out on that one. I did get rugged on Enlight Finance. That was cool. Nice little pre-sale. Got rugged on that. That was an LSDFi play that turned out to be a scam. So that was cool. Very cool. Farmed their Discord. Did all the tasks. Awesome. Always good to lose time and money. What else has been going on? I mean, we're just in a multi-year low of volatility, right? So you have to understand that that's the environment we're in. And when you understand that that's the environment we're in, then, you just have to be in capital preservation mode. There's not a whole lot to say. It's like, hey, things will get easier at some point. Times will get better. So don't chop yourself up into oblivion. And I'm very much speaking to myself because I've been doing this. I'll make money, lose money, make money, lose money. Chop yourself into oblivion in this market. Frankly, I mean, it's gotten so bad that I really, besides like ETH, I consider my exposure like ETH and stables, but like as far as non-ETH stable exposure, I'm pretty much never going over 10 to 15% of my portfolio at a time. Like 15% is about as much exposure as I'm getting to non-ETH basically. And I mean, because there's just nothing I can really, first of all, liquidity is so bad that there's nothing that I really feel confident like trying to size into that if I need to get out of quickly, I'm not going to just get wrecked on slippage. So that's number one. And number two, it's like I don't have any like conviction on a lot of stuff right now because there's so many coins that are like popping up and new plays. But, like one thing I'm sure some of you can relate to this is one thing, we all joke about being degens or whatever, and sure, like when you tell an average normie, like, oh yeah, like I only put my money in crypto, like I don't really trade anything else, and there are times where I have 100% crypto exposure, right? They think you're insane. That's fair. But when you compare yourself to other people in this space, I realize that I am not a degenerate like some of these other people are. Because, like, I can't bring myself to put, I mean, people will literally put, like, a quarter, a third, half of their portfolio in, like, one coin and just bet it all. And in an environment like this, if we're, like, really rocking in a bull market and you're just looking for that make it play and you have utter conviction, even then, it's very risky, but, hey, go for it, buddy. Go for it. But in this market, people are just putting their fucking portfolios on the line on, like, dog shit. It's crazy. It's crazy. And, you see the hero story where sometimes it works, and, hey, good for you. Congrats. But, I don't know. I'm not that guy. I'm not that guy. I know I'm not that guy. I'm not the guy who's, like, willing to. I just know you have to always ask yourself that, like, are you going to be more upset if you make a big bet in this current environment and it fails and you lose a bunch of money and now you have less capital to work with when things get better and things get easier? Or are you, like, going to be more upset if you didn't make a big bet and you could have made money? Because for me, I'm much more upset when I lose money than I am happy when I make money in an environment like this, right? Does that make sense? Like I hate losing money in an environment like this because I just know I'm like, dude, you need to be making, like, obviously losing money is like part of the game. You're not going to win every trade, but I made a couple, I got impatient. Like, I really haven't taken a sized bet in, like, I don't know, since like March, April. I can't even remember the last time. So it's been definitely over a month, maybe 2 months. And I got a little impatient last week, and I was trying to load up. I was buying GHA gassed. I think I talked about that on this show. I was in it from, like, the high 50s, low 60s, and then it started pushing up into the 70s, and I just started adding to it. And that one had decent liquidity, so I was like, okay, I'm gonna try building a bigger position. Luckily, I was about to put another big clip in it at like 76 or something, but I said, let me wait a minute, let me sleep on it. And it, like, topped out at like 79, but it just cratered back down because I thought it was finally, because it's been in this consolidation range, and I thought it was going to break out like past 100. And so I was like, this is going to be my size trade, like, for the month. I'm going to nail this bitch, and then I'm going to chill. And it didn't work, and then I got a big clip. And I had to size down, because I was like, okay, I'm way too exposed. I was playing the breakout. This thing totally failed to break out. So I had to reduce size and take a bit of an L. I still hold some of it, but, it's a bummer. And, but I was pissed with myself because I was like, dude, did you do that? Because, I mean, part of me really, like, I'm still going to, like, add more into that trade at some point with GHA because I do think gas is a good protocol. But I had to ask myself, did I make that trade because I really, really thought, like, that was the trade? Or was it because I hadn't made, like, a big swing in 2 months and I was just impatient and I was like, let me just get this one, like, sick trade and then I'll be good, for the rest of the month and I can chill out? And the answer was the latter, right? That was the truth. And it cost me. It didn't cost me too much. I mean, it's not like it totally dumped. It just went back from, like, whatever, like 79 back down into the 60s. So it wasn't like a crazy, like, 50% drawdown or anything. But, I mean, I took a stupid hit that I've been very, very good about being disciplined and, like not taking losses basically in this environment and taking very minimal losses. And that was the first, like, decent hit I took. And it was dumb. It was dumb, but, it happens. It happens. So, because in this market, the problem is, like, I'll grow my portfolio 5%, but all it takes is one dumb trade like that to just lose, like, 3-4%, and then I'm back. I just lost what I grinded over the last few weeks, because I'm in this market. Ideally, I'm trying to do, like, I'm not trying to be greedy. I'm just trying to do, like, 10% months, I mean, nothing crazy, which I know obviously, in other markets, people 10% months are crazy, but like, this is crypto. I'm not in this market. I just want a 10% month. That's all I really want, but I didn't get it. I mean, I was at like a 5-6% month, and then I took a little L on that. So I'm probably up like fucking 2-3%, man, for the last month. And is what it is. But it's just, you just have to accept it, though. You just have to say, because I'm just like, I don't care about, I've totally removed the FOMO out of my system. I don't care about making big plays in this market. I just want to get my singles and doubles, I just want to grind out my little profits, because the time for big profits and big swings will come. I love to take a big swing. No, there's no better feeling than like having that conviction play and saying the timing is right, the market is right, I'm really going to go for it. And I had a few of those earlier this year. But it ain't the time, man. It ain't the time. So you just have to accept it. But the good news is we really are getting some bottom signals here, boys. I gotta tell you. I mean, we are at peak disinterest from normies for sure. Normies could not care less about crypto right now. VCs, I saw just today or a couple days ago, like VC investment in crypto is at its lowest in like 4 years or something, basically since the last bear market, and it's down like 80% from just a year ago. So VCs, all these like tourist VCs have left. A lot of them are literally pivoting to AI. Jason Calacanis had a tweet today saying, if you work in crypto, you should quit and work in AI. These are all the things that you want to see. These are all the types of things that you want to see. There's a Vox article saying crypto's dead, all this type of stuff, right? And then on top of that, just more and more regulatory FUD hitting with Gary, which we'll get into in a second. And even the biggest thing is like even crypto traders themselves are just getting burnt out trading this market. I see a lot of guys saying, screw this, I'm going to go trade equities, I'm going to trade Forex, whatever. And it's like, to me, that's always a signal. When the people who even spend their lives in this market are like, man, I just can't take it anymore. That tells me we are thoroughly into the time capitulation phase, because that's the part of the bear market people always like underestimate. Is everyone always remembers the big crashes and the big red days, and you're like, oh my gosh, but there's still too much excitement there, right? Big red days are exciting, right? It might be exciting for the wrong reasons, but there's lots of attention, right? When FTX was crashing and Luna was crashing and all this stuff, there was still lots of attention on the market. Now there is no attention on the market, and that's why we're just going sideways or down mostly. But it's just super flat and low volatility, because there's just not a lot of people playing this market. Liquidity is low, volatility is low, attention is low, And the three things that you need for crypto to go up is you need liquidity, you need volatility, because that's why people trade this market. If there wasn't volatility, there's plenty of other markets to trade. You trade this for the volatility, and you need attention, right? And so those are the three things you need for this market, and we have zero of the three right now, which, feels bad in the moment, but is what you want to see if you're saying, okay, well, clearly we're not in a bull market. So if we haven't been in a bull market for a year and a half now, you want to see those things like go away, because that is what you need to kind of renew and refresh and start the new bull. So next year, that's really the what I'm expecting. Been saying that forever. And that's it. So probably another 6 months of not very fun. It could happen sooner, maybe. I mean, stocks are ripping it, but I don't know if they're going to be back into a bull or if they're kind of just having another bear market, like sick rally here. I don't know. It's hard to gauge. I don't trade equities, so I don't want to have a super strong opinion on that. I mean, the Fed is very likely to pause soon, so that could be a very positive catalyst. And then if they were to, cut maybe at the end of the year, I think you would pretty solidly say, okay, it's time to start the next cycle. So that's it. So we're just fully in the time capitulation phase, and so the most important thing you can do now is just not leave, not give up now. Like, this is the worst possible time to give up, and I'm sure most of you aren't planning that, right? Because I think a lot of you, like myself, made that mistake in 2018-19 when things got really boring. You kind of just stopped paying attention, and then you missed a lot of the early gains, and you started coming back in later. I do not plan on making that same mistake again, so that means I will deal with the pain now so that I don't miss the meteoric gains later. So that's it. Not much to say. I say not much to say as I talked for like 20 minutes. Okay, let's talk about Gary Gensler, and what I really think is going on behind the scenes. So obviously, the SEC this week filed lawsuits against both Coinbase and Binance, alleging that they are basically operating illegal securities exchanges, unregistered security exchanges, and they listed a bunch of tokens like Solana, Matic, Avalanche, and a bunch of other crap. Some of these coins, it's like Dash and like random shit that I'm like, who cares? But they always do that. But more interesting to me, outside of the news itself, was the various responses and chatter around this announcement. It's been no like secret that a lot of people within the SEC and a lot of people within Congress and other, you know, people in charge of financial regulation have said that Gary seems to be consistently like overstepping, you know, and that he has this, a lot of people are like, why does he have such an aggressive, strong vendetta against crypto? Like, one thing is saying, okay, we need to regulate crypto, we need to crack down on the bad guys or whatever, but a lot of this just seems really excessive and kind of out of nowhere, because obviously, as you know, I'm sure you remember when he first got appointed by Biden in 2021, you know, a lot of people were excited because this was a guy who worked at MIT and basically gave all these lectures that were talking about blockchain and crypto tech and all this stuff, blah, blah, blah. And it was like good news. And then as soon as he became the SEC chair, his tune totally flipped. And over the last year or so, he has just been going after crypto relentlessly, nonstop, constantly. And doesn't really make sense, right? Why did this guy just switch up like that? You know, it's fair. I mean, there's nothing wrong with saying, hey, there are bad actors in this space and we need to get rid of them. That's fine. And so we saw even this week, after these new announcements of more lawsuits, that more other financial regulators came out and were like, this guy is he's overstepping his bounds, right? He's going too far, you know. And we saw, I have an article up from MarketWatch where basically even someone on the House Financial Services Committee was like, yo, dude, what are you doing? You know, I'll read the article, but it basically says, the Securities and Exchange Commission is engaged in a multi-front battle against actors in the digital asset industry that intensified this week after it filed lawsuits against Binance Holdings Inc. and Coinbase Global Inc., two of the largest cryptocurrency exchanges in the world. But there is a growing sense in Congress among former regulators that SEC Chairman Gary Gensler has bit off more than he can chew and is undermining congressional efforts to regulate the digital asset industry. Quote, the latest enforcement action against Coinbase is an egregious example of regulation by enforcement, Representative Richie Torres, a New York Democrat, told MarketWatch. Quote, it demonstrates a complete contempt for Congress, which is in the process of developing a framework for crypto regulation. So this is even someone from this is even a representative, a Democrat, by the way. So this isn't like some, like a Republican saying something because Gensler is, we've seen some Republicans, because obviously Gensler was appointed by Biden in a Democratic administration. So we've seen some of that tit for tat. But this is a Democrat from New York, which obviously New York is the place where most financial regulation comes out of, right? You see this within New York Attorney Generals. Obviously, the SEC themselves are based there. So you see this from a Democrat from New York even saying this, right? And it continues. Gensler has signaled his growing displeasure with the industry in speeches, congressional hearings, and media appearances, telling a congressional panel in April, quote, "I've been around finance for 40 years. I've never seen a field so non-compliant with laws written by Congress," unquote. Torres, who sits on the House Financial Services Committee that oversees the SEC, says Gensler's current stance is evidence of a radical revision of his views on the technology from when he taught a course on blockchain and money at MIT in 2018. His, quote, "his view of the law has been constantly changing," Torres said. Mr. Gensler has gone from a crypto cheerleader to a crypto skeptic, end quote, a change that Torres believes is motivated by his politics. Quote, "He's portraying a crypto as the villain in order to portray himself as a political hero," end quote. That's pretty scathing. That's pretty scathing from someone who works on the very committee that oversees the department or the agency that Gary Gensler runs, right? So even people within Congress, even people within the SEC and other departments have said, well, this guy is... He's like off his rocker. Like, he is going so hard against crypto. By the way, while there's tons of shit going on in regular securities world that he hasn't really gone after too much, right? I mean, we had the whole SPAC debacle back in 2020 and 2021 that guys like Chamath Palihapitiya, who's recently been critical of crypto, very hypocritically, that... a lot of those things were very blatant scams. You can go and look at a lot of the SPACs that launched back just 1 or 2 years ago, and a lot of those things are down 90-95% on promises of innovative technology and grandiose visions that didn't come through. So if someone does it in a digital asset space, that's bad. But if someone does it under my purview, that's okay. Very interesting. Very interesting. And so you have to ask yourself, why did this guy switch up so hard? To the point where even people who are supposed to be on his side, right, like Democrats in the House, are going against him. People within the SEC have spoken out against him. And then obviously we've seen other representatives and other people in financial regulatory, in the financial regulatory space speak out against him too, right? A lot of people are noticing, what's up with this guy? What's going on here? Well, very interestingly, the day after the Coinbase lawsuit announcement, there was the Bloomberg Investment Summit. Okay, the Bloomberg Investment Summit is just, one of these financial summits, whatever. Bunch of investors get together and they talk in front of a stage. But anyways, or on a stage, in front of an audience, I should say, not in front of a stage. One of these things. A little summit. But the CEO of Soros Fund Management spoke at the Bloomberg Summit. And I thought this was really interesting because I have another article. So this came out the day after, okay, all this stuff happened, all right? And the headline of this article, now this is from The Block. This is a crypto outlet, but the quotes are directly from the head of Soros's fund. Obviously, many of you probably know who Soros is, but I'll get into that in a second. The title of the article is Soros Fund Management CEO says crypto is ripe for a TradFi takeover. You get into the article. Soros Fund Management CEO Don Fitzpatrick is bullish on crypto, even with the recent headwinds, including the U.S. Securities and Exchange Commission suing trading platforms Binance and Coinbase amid a prolonged downturn. Quote, "Crypto is here to stay," she said during a Bloomberg Investment Summit. Quote, what's happened is clearly a setback, but right now I actually think it's a huge opportunity for the incumbent financial firms to actually take the lead, end quote. Okay? So he comes out, Gary Gensler comes out, and has been, I mean, obviously this isn't anything new. He's been trying to go after crypto for a while, but this has been one of the biggest things he's done. He's literally suing the largest American exchange and the largest global exchange in back-to-back days, okay? And the very next day, the CEO of Soros's fund, which manages most of Soros's money, but other people's money too, says, oh, I think crypto's great. I just think it's in the wrong hands. The people who have done everything to make crypto what it is, the Coinbases and the Binances and all these people, I mean, obviously, you know, not just them, but you get the point. Obviously, Coinbase has been around since 2013. They were one of the OG exchanges. They've been around for a long time. I mean, criticism about their customer service or user experience aside, I think we can all agree that as for the crypto space in general, Coinbase has done a pretty good job putting the space forward, especially in the United States, right? It's very convenient that she says this literally the day after all this stuff happens. I'll continue in the article. Fitzpatrick says she expects established financial firms to take over as investor confidence in some platforms wanes. She also alluded to the fact that average consumers and traders would likely benefit from such a shift as traditional institutions segregate client assets properly. Those are her quotes. The CEO admitted there is some irony to the idea of traditional financial firms taking the lead in a market that is meant to be defined by disruption, decentralization, and the emergence of new institutions. But Fitzpatrick said that crypto development to this point has been partly mismanaged. Quote, especially the headlines the last couple of days, she's obviously referring to the lawsuits, it's clear that these crypto-native platforms would have benefited from having an adult in the room, end quote. They always love saying that line, don't they? Crypto needs an adult in the room. Crypto needs the established institutions that have all the money and all the power. They need us to help them out, okay? You know, the people who have been taking advantage for over a century, well, they need us, okay? They can't replace us. They need us. They need our maturity. They need an adult in the room. I'll continue. Quote, there are just long-held and simple norms about how you treat customer assets, end quote. Blah, 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 blah. Fitzpatrick's Soros Fund Management is an investment firm that handles a pool of capital that is largely owned by billionaire George Soros, valued at nearly $30 billion, the CEO said on Wednesday. So anyways, that's what this article said. And it's not so much this article in particular or those quotes in particular, right? Or even like the Soros Fund in particular. Now, that one is pretty funny because, you know, if you look at the connections here, like if you let's back up for a second. Let's back up. Let's connect some dots. Let's lay this out. So who is Gary Gensler? Gary Gensler is a guy who worked in the traditional finance space for years. For those of you who don't know, Gary Gensler himself is a multi-8-figure net worth guy. Okay, he's not some pleb. He's not some poor. He's not some bootstraps, politician, grassroots politician. No, he worked on Wall Street for years. He's a decamillionaire. Okay, and then he decided he wanted to work in the public world. Well, who is Gary Gensler? Appointed by Biden, obviously. He was the appointee after Biden became president in 2021. Gary Gensler became the head of the SEC. Well, who is the biggest donor to the Democratic Party and who was one of the, if not the, I'd have to double check, the biggest donors to Joe Biden? George Soros. Very interesting. Who is George Soros? If you don't know, he is formerly one of the most famous hedge fund managers in the world. I mean, he's very old now. I should say a lot of this stuff isn't necessarily him. I mean, he's like in his 90s. A lot of this is his son now. So when I say Soros, I mean both him and his son, because his son is mostly running things now. But George Soros' father started a lot of these things. He started the Open Society Foundation. What is the Open Society Foundation? Open Society Foundation is one of the biggest, quote unquote, philanthropic foundations in the world. It's been massively funded by Soros himself and others, and they founded Black Lives Matter. That organization was founded by George Soros' Open Society Foundation. They founded a bunch of other things and supported a ton of other causes, progressive causes, and that's who George Soros is. And his fund, which, as we saw in the article, was the last sentence there, Soros Fund Management is an investment firm that handles a pool of capital that is largely owned by George Soros. Okay. So the biggest donor to Biden, who appointed Gary Gensler, the CEO of his fund, is saying, hey, I think we should be in charge of crypto. I think we need to get rid of the Binances and Coinbases and all the crypto establishment, basically, and replace it with the traditional finance establishment. I'm sure that's all coincidental, right? I'm sure it's purely coincidental that Gary Gensler was totally pro-crypto before joining the SEC, but after joining the SEC, where he also had made clear from the beginning that him joining the SEC, his goal is not to just be the chairman of the SEC. His goal is to eventually step up and either be the chairman of the Federal Reserve or be the head of the Treasury, right? He wants one of those two jobs, right? He wants to be the next Jerome Powell or Janet Yellen. Well, you're only going to get there if you're doing political favors from the people who appoint you. Because keep in mind, those jobs are not elected, they are appointed, okay, by the president. Well, obviously, Joe Biden is up for re-election in 2024, and I am sure that George Soros and his foundations will be one of the biggest, if not the biggest, donors to Biden in 2024. And I am fairly positive that if he were to win, that Gary Gensler would likely take up one of those Treasury or Fed positions. Maybe not now, because a lot of people are unhappy with him, but, that was kind of the idea. Is it possible that there was some type of exchange where, someone told him, hey, we want to take over crypto. We want to be the new establishment in crypto, so we need you to go hard at them. And if you do this for us, then the next time, if we win re-election or possibly down the road in the future, we will appoint you to that job that you so seek, right? Is that what happened? We don't know for sure. But it's very suspicious, isn't it? Is it not a bit suspicious, right? Because if you don't think that Gary Gensler, like I said, a guy who cut his teeth on Wall Street, a guy who made tens of millions of dollars, maybe even more, I don't know exactly what he's worth, but that's roughly, he's estimated roughly at like 50 million plus, I don't know exactly. But he made it, okay? He made it big on Wall Street. You think a guy who made it big on Wall Street like that hasn't seen everything there is to see when it comes to financial fraud and criminality, or at least borderline, questionable, gray area, immoral, borderline, immoral, unethical, or totally immoral and unethical activities? I mean, the guy worked on Wall Street during the 2008 crisis, okay? I'm sure he saw a lot of shit. He was at Goldman, okay? He knew everything that was going on, okay? You don't make $50 million on Wall Street without getting your hands dirty, okay? So for him to come and act like, sit on this high horse that crypto is the worst thing I've ever seen. Oh, the trillions of dollars of fraud that occurred when I worked at Goldman. Listen, that was fair play. But crypto, oh my God, it's terrible. right? So that's how this stuff works, okay? That's how this stuff actually works. And you have to always remember that. You know, whenever people like this do things that don't make sense, very often it's not because this guy is some schizophrenic bipolar, okay? It's because he's got incentives to do the things he's doing, all right? He's a player in a game, right? And if it wasn't him, it'd be somebody else. So it's not even so much about him specifically, you know? He's the face of the SEC. He's the face of this operation for traditional finance institutions to try to shove the establishment crypto out and make themselves the crypto establishment. But that's the game these guys play. And you have to understand that. And that's always been the game. That's always been the goal. And so the message is really, these guys are coming. I mean, we've known they're coming. You know, BlackRock doesn't lead the investment in Circle by accident, right? I mean, Fidelity has been trying to become a major crypto player for years now. Fidelity manages more than $1 trillion. I forget exactly their assets under management, but they're a $1 trillion asset manager. Okay, they're one of the biggest asset managers in the world. BlackRock is the biggest asset manager in the world, right? These guys don't do these things by accident. And they also plan in years. They don't plan in months. You know, one of the problems with crypto is that it's a very new, young industry with a lot of young people. So we get impatient. We don't like to look at things on multi-year or even decade timelines. But that's what these guys do. And that's what they specialize in, right? And they saw an opportunity with this bear market, with all the things that happen in crypto. And I'm not saying that there aren't bad things that happen in crypto. Of course, there are plenty of scams, plenty of con artists, all of that. We know that. But don't think for a second that there aren't plenty of those things happening in traditional finance too. Okay, number one. And don't think for a second that traditional finance institutions wouldn't see this as an opportunity, crypto being so beaten down into the ground over the last year, as an opportunity to come in and pick it up from the ashes after contributing to its downfall and say, oh, we're going to rebuild this foundation, quote unquote, the right way, right? Our way, where we're in control. And then we can have crypto in America. Then we can be much more positive towards crypto, right? Then all of a sudden we'll start passing all this legislation and have a crypto-friendly SEC chair and all this stuff, right? Only after we have our allocations, we have our control over this market. That's what's happening. That's what's been happening. You know, to the extent that they will succeed, we will see. But I guess the real big thing is, you know, back to earlier with the time capitulation, don't fall for the banker forced capitulation, you know? Unironically, the meme of don't let the bankers take your coins, you know, the bankers are coming for your coins. Don't let the bankers take your coins. Make the bankers buy the coins from you. You know, if they're going to take them, at least get rich from it. That's really the only answer. Whether we have control over the big stuff, I don't know. You know, let unto Caesar what is Caesar's, right? Listen, if the bankers end up in charge, you know, hey, there's only so much us little guys can do. But we can certainly profit in the meantime. And that's what you need to do. So don't quit, don't leave, don't get fooled into, oh, crypto's fucked because of the regulators and blah blah blah. That's what they want you to think. That's their goal. They want you to think that, right? They want you to capitulate so that they can take it over, and then you're gonna have to buy your coins back from them. No. They're going to have to pull these coins from my cold, dead body. Okay? They're going to have to buy my coins. All right? You want to take my industry? You're going to have to buy, you're going to have to pay me off. All right? for a lot higher than the prices are now. So that's it. That's my summary of what I think is going on here. And I think it's pretty clear when you kind of step back and look at it, at what's going on. So that's it. Stay optimistic. Don't get down. The market's kind of shitty right now, but you go through the pain today for the gain tomorrow. That's it. Simple as. Always has been, always will be the name of the game in markets. So stick around. Don't go away. Don't let the bankers buy your coins. Don't let the time of boredom and pain make you quit. Don't quit now. I mean, if you quit now, after all this, are you kidding me? After all this we just went through over the last year and a half, you're going to quit now? Come on. Don't be weak. Don't be weak. It'll be the biggest regret you ever made because, as I said in the previous episode, this next bubble is going to be even bigger than the last. And people are not going to believe it. People are going to be in utter disbelief at how big this bubble is going to be. Trust me. So, capital preservation. Don't lose all your money. Don't get blown up in a bear market. And don't let the makers buy your coins. That's it for me today, guys. I will see you next time. Make sure to follow me on Twitter. Subscribe on YouTube if you haven't already. Follow on Spotify, Apple Podcasts, wherever you like to listen. And, I will see you guys next time. Peace.